what do you think about selling covered calls, covered MicroStrategy out of the money calls on each Monday that expire on that Friday to fund MicroStrategy buys, especially when MicroStrategy trades at 2 to 5% premium to Bitcoin? Now, is it easy money or playing with fire? Again, this is selling calls. I only do it after a price spike and when the asset is completely overbought and you want it to mean revert. That is key. Doing it regularly won't work. You will lose, you'll be called out, etc. And remember as well, the ARB Cloud actually helps you do this too, because it tells you exactly when MicroStrategy is overvalued or undervalued. Absolutely critical. But the most important thing is this, and that is you are playing with fire if you do this strategy. It can work, but you have to only sell the calls on spikes when it's going to mean revert, not other than that. And remember as well, there are 4 things that determine the price of MicroStrategy. The most important one is Bitcoin. that moves about 90 to 95% of the price of MicroStrategy. The company's financial performance is another factor, or concern about debt and risk, investor sentiment, as well as the need for a Bitcoin on-ramp, and of course macro. The third point is very, very important, and that's why this model is killer, because sometimes there are big institutions that want that Bitcoin on-ramp, and the easiest thing they can do is not buy GBTC. No, they buy MicroStrategy, and they buy in big clumps, and sometimes the amount of liquidity depth in the market is thin. So when BlackRock goes in and buys a couple of million shares, price goes crazy, way higher than it should. And that's the whole play here. So remember that you're not playing a stock, you're playing a proxy of Bitcoin. So you always have to watch Bitcoin and watch the other factors too that can actually drive it in that little list here. But remember, 90% plus is driven by the price of Bitcoin.